if the money is going to ultimately go to charity, right? And then you do QCDs, the Roth conversions are not as important.
Judi writes in, Big Al from San Diego.
Okay.
I am in my 70s, Social Security and pension pay all my bills with a little bit left over, with an income of $55,000. I own my home, car, golf cart, and have no debt. $500,000 in an IRA, $20,000 in a Roth, $20,000 in brokerage. Most will go to charity upon my death. RMDs are split between QCDs and transferring to brokerage. I'm in the 22% tax bracket. So, bottom line, my life is great as is. I'm healthy. I'm not a good spender, even now. I've done my traveling. I don't mind paying my taxes, but would prefer not to pay more than necessary. I've been doing Roth conversions every year, $12,000 paying the tax for my IRA, as the tax rates will increase in 2025. But now I'm unsure and would like your thoughts. Is it prudent for me to continue to do conversions in a down market? I'm trending towards yes, as I will have to pay the tax in the future. But I have friends who say no, as I won't make the cost back.
Okay, break even. We've heard that before, right?
Yeah. There's costs, I guess, associated.
Yeah, taxes.
Yeah, you won't make it out.
Right, because you're too old to start.
Yeah, it's bad.
Or so the argument goes.
Yes, they're wrong, by the way.
Little teaser. Okay.
Yeah. Does it matter when I pay taxes now or later? Am I wrong thinking paying now works fine? I appreciate your thoughts. Thanks. Okay, a couple of things. She says her income's $55,000 with the standard deduction. She's in the 22% tax bracket.
Yeah, single, 55 minus 12 ish.
She's barely in it.
Barely. Yeah, barely.
So she gives half of her RMD, which is 10 grand to charity, and another 10 or 12 and 12, I guess is what she's doing here.
Right. I guess the what pushes her over is the RMD probably.
But she's given half that as QCDs, which
I understand.
is straight to charity.
Yeah, correct.
Then the other one's going into the brokerage.
Right.
So she's converting 12 and she's paying taxes out of the IRA.
Right. Because she doesn't have a big brokerage account.
Well, she's got 25 grand, but the RMDs are going in the brokerage account.
Right.
Okay.
True. That's true. Yep.
Okay.
True.
Right. So a couple of things. Well, if you're paying taxes out of the IRA, I don't know if that makes any sense.
Well, so here's a couple of my thoughts right off the bat. So if the money is going to ultimately go to charity, right? And then you do QCDs, the Roth conversions are not as important.
Yeah,
right?
It makes zero sense.
Right. On the other hand, if you have some, I don't know, you say most will go to charity upon my death. If you have some kids or nephews or grandchildren or whatever you'd like some money to go to, then the Roth IRA is definitely the best way to go. And so then that would make sense to continue. Also, Judy's already noted that the tax rate's going up in 2025. The 22% bracket will be 25, so it'll be more expensive later. And furthermore, if you do conversions now in more of a down market, it's to your advantage, right? Because you get more in and it's less tax. If you're going to use the money yourself or give it to nieces and nephews. If you're never going to use the money yourself, a Roth conversion isn't really that important.
Right. If it's going to charity, then do 100% QCD, and it doesn't matter.
Yeah,
You'll never be in that bracket. You'll
Right.
never pay taxes on the RMD.
Right.
And then if the beneficiary's at charity, then they're not going to pay taxes when they inherit it.
Right.
However, if you want more cash flow, or if you want to have to build, because she's taking half of the RMD and she's putting half in her brokerage and half not.
Right.
Right. Or half to charity.
Sure.
So I guess we got to square that away first to determine what makes sense. But
right.
Here's the argument that she's having with her friends, is saying it's going to take her too long to catch up because of the cost of the conversion. But what are they forgetting?
Well, they're forgetting that no matter when you pull the money out, you have to pay tax. Right. So it's like the $100,000 in your IRA is not really $100,000 to you. Let's say you have 25% bracket, it's only $75,000 to you, right? So you have to calculate the tax you got to pay now versus later. And when you do the math, if you're always in the same tax rate all the time, forever and ever, then it makes no difference. right? Because whether you pay the tax today or tomorrow, it's the same tax. You pay 25% on a IRA that's grown versus 25% on a lower IRA. The numbers work out the same. Trust me, if you do it on a piece of paper, you'll see what I mean. Now, on the other hand, when you are in a lower tax bracket, right? Or when you want the money to go to nieces and nephews that may be in a higher tax bracket, or when the market's lower and you can take advantage of the market recovery, there's a lot of reasons to do Roth, even if you're going to be in same tax bracket.
Right. Okay. So because what they're not looking at is the purchasing power of the money.
Right.
Right. Like you said, Al, $100,000 in an IRA is not worth $100,000. I can't take $100,000 out and buy something with $100,000.
No, you got a partner. That's the IRS.
Right. So I got to pay my partner first for me to take the $100,000.
Right.
So if I find something beautiful that I want to buy for $100,000 and I look at my account and my IRA is worth $100,000, I can't afford whatever I want to buy. Let's say it's a nice little cabin somewhere in northern Minnesota, right? I suppose it
wouldn't be a very good cabin.
Yeah, it's a really dumpy cabin. Who cares?
But at least you could buy it.
Right. I can't afford it because I don't have enough money, because as soon as I take the distribution, the $100,000 out, I'm going to owe $25,000 in tax, assuming that simple math. In her case, 22%, so 22,000.
Yeah, right.
So she's looking at this wrong, or her friends, or the discussions that she's having, they're looking at it wrong. Because as the IRA grows, you're right. It's the same tax. It's the same number. But what's the difference between a Roth and a traditional IRA is you have a lot more control, right? You don't have an RMD in a Roth IRA. It passes 100% tax-free, to nieces and nephews. If it's going to a charity like we try to look at before, the point's moot.
Yeah, you actually pay tax that you didn't need to pay, right? Except that, so let's say Judi lives to 100 years old. Then she has all these required minimum distributions at higher tax rates that she could have done something about with the Roth IRA. So that there's actually a reason to go ahead and do it now.
But now that she's going to give 100% of the RMD to the QCD.
That's right. But that's not what she's doing now. She's doing 50-50.
No, I agree.
Right. But yeah, if 100% goes to charity, QCD, which means once you're over 70 and a half, you can give your required minimum distribution to charity and you don't pay tax on it. That's perfectly allowable. And if when she passes, everything goes to charity, you would never do a Roth conversion. There's no need to.
Right. And I don't know, it's like she can't spend more. She's already done her traveling. She's already done everything. So why is she taking, why isn't she giving 100% of the RMD to the QCD?
Yeah. Well,
I guess would be my question. Why don't you just do that and then avoid the taxes altogether?
Here's why I would. It's because the brokerage account isn't really, it's got 20,000. It's not chump change, but it's not a lot in case something happens that you want the money. So I would actually build that up a little bit.
But I would use that to pay the taxes on the conversions.
Well,
if she's going to do conversions, if it makes sense.
I agree with that.
But in this case, I'm not sure if it makes sense because of how charitably inclined that she is.
I would agree with that.
Are you prepared for retirement? Schedule a free financial assessment with an experienced financial professional right online at purefinancial.com.